Good evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the S&P E-mini futures. Today is Wednesday, September 21st, 2011. The following are examples of trade setups that occur on a regular basis. We are showing 8 valid trade setups for a potential profit of 25 ES ticks. The market opened up this morning at 1196.75, represented by the white dotted line. From 9:30 until 9:45, we don't usually trade. Coming out of the no trade zone, we did have an opportunity to get short. We hit our first target and then got stopped out for -2 ticks. Shortly thereafter, we had an opportunity to get short. Target 1 and target 2 were hit for a total of 8 ES ticks. You'll notice these are written in yellow. Yellow are simply the trades that we did not take in the trade room. They are valid trade setups nonetheless. We have a period of time what's called a tangled net, an indication of sideways movement, congestion, consolidation. Some of the moving averages we use all get tangled, so we call them a tangled net. And also with the fact that today is FOMC announcement, we have no problem sitting on our hands waiting until that announcement. Generally, you'll see a strong move in one direction or the other, and then it'll go into consolidation mode until that announcement occurs. We had another opportunity to get long here right at around 10 o'clock. Target 1 and target 2 were hit for a total of 9 ticks. This was so close to a news announcement, existing home sales, but according to the trade plan setup, it materialized. So anyways, we keep those in yellow. That means we're not counting them in today's results. After breaking through the opening price, we saw a retest of the opening price, had an opportunity to get short. Target 1 was hit and then we got stopped out. Now there's 3 different types of setups we take, and in this case, this was an expanded trade setup, did not have an opportunity to complete, followed by a second chance opportunity to get short. Target 1 and target 2 were hit for a total of 10 ticks. This just seemed like a much more viable trade. The other market internals were indicating a downside potential. So in that particular trade, we took that to the downside for a total of 10 ticks. The market proceeded on, figured the sideways movement, weren't going to get any burst one way or the other. Now during FOMC announcement day, many of our internal indicators, price action, not be reliable. Reporting on Bloomberg News and CNBC, they're saying that they actually turn off their algorithmic trading machines because of the volatility and inaccuracy of the machines. We found the hourly range low as a type of, I don't want to say support area, but just kind of wrapped its way around it. Did go for a trade long, got a total of 16 tick loss. It was a risky trade, 11 o'clock prior to the no trade zone, prior to the FOMC announcement, but you can't just stop trading. We then had an opportunity to get short. Target 1 and target 2 were hit for a total of 9 ticks. We're going into a no trade zone. That's a period of time of higher volatility, lower volume, and it runs from 11:30 until 1:15 Eastern Standard Time. Coming out of the no trade zone, we waited for the FOMC announcement, which was delayed, and initially there was a burst upward, and then there was a heavy sell-off. This was the move we were waiting for. Looked for a retracement, did not find enough for us to be able to get in short. 50% retracement right there. Opportunity to get short, target 1 and target 2 were a total of 18 ES ticks. Now what does this look like? Let's look at a different screen. This is a basic retracement that'll occur on FOMC announcement day. You'll have a burst in one direction or the other, you have a 50% retracement, and then you have your sell-off. This is the symmetry of the market. Look at this. The initial move downward, support, retracement, continuation. So with that, you can gradually scale out of your position once you get your 2, 3, or 4 point profit. But all in all, as we progress forward, I want you to see how this profit target eventually gets hit down here at about 230. As market continued, we had an opportunity to get long. Target 1 was hit and got stopped out for -2 ticks. Taking a long trade at this point was a mistake, and then we followed the rest of the market until our tangled net came back into the picture. So we did not take this trade. However, nice trade setup. We didn't count this for today's results. Target 1 and target 2 were hit for a total of 16 ticks. We then concentrated only on trades that was set up to the downside. Target 1 was hit and got stopped out for -2 ticks. And then it went back into the tangled net again. An opportunity to get long. Target 1 and target 2 were hit for a total of 15 ticks. Market continued. An opportunity to get short. Target 1 and target 2 were hit for a total of 10 ticks. And then the market sold off heavy. There's plenty of other opportunities, the pullbacks to either moving averages or using our market internal indicators. Nice shorting opportunity there, nice shorting opportunity there, and on into the close. So I want to thank you for watching. To learn more about these and more advanced trade setups, or to get a copy of your TraderShark trading manual, please visit TraderShark.com. Thank you and have a great evening.